In this video we are going to talk about buying Dividend Kings for passive income in 2021. So before starting this video, please like this video and subscribe to our channel for future updates. If you want to generate passive income, including dividend-paying stocks in your portfolio could be a good idea. Which dividend stocks are worth your time, is the question. If you want to hold companies that have increased their dividend payments for 50 years or more, the so-called Dividend Kings could make sense. Consult a financial counselor to identify new sources of passive income. Definition of Dividend Kings. Dividends are a portion of profits distributed to shareholders. Although not all equities pay dividends, there is a hierarchy among those that do. On one level, you have shares that pay monthly dividends, however these payouts may increase or fall over time, and they may even be halted or cancelled at the discretion of the board. Then there are dividend aristocrats, which are S&P 500 businesses that have increased their dividend for 25 years or more in a row. That sounds excellent, but the Dividend Kings are at the top of the ladder. These are also S&P 500 firms who have increased their dividend payment over time, but instead of 25 years, they've done it for 50 years or more. Johnson & Johnson, J&J, Coca-Cola, K, and Procter & Gamble, PG, are among the few corporations that have earned the moniker of Dividend King, PG. New names are rarely added to the list. Consumer cyclical stocks, consumer defensive stocks, utility stocks, and industrial stocks are among the Dividend Kings from various sectors. The fact that these companies have been operational for decades and have a history of routinely paying out larger dividends to shareholders is a common thread among them. Why invest in Dividend Kings? Adding dividends to your portfolio might provide you with a second source of income. This is an advantage in and of itself if you're looking for present income or want to save for more income in retirement. You may be able to set up a dividend reinvestment plan, DRIP, and utilize your dividend payment to purchase additional shares, depending on the stock. This can aid in the long-term growth of your portfolio's worth. So, what are the positive aspects of Dividend Kings in particular? The solution is straightforward. They provide a good balance of stability and dividend growth over time. Dividend aristocrats are very comparable to Dividend Kings in this regard. Because these are well-established enterprises, the chances of their lowering or eliminating payouts are small. And, while it's not common, firms can choose to withhold dividends temporarily or permanently if they're having financial difficulties or going through a big restructuring. While Dividend Kings are not necessarily less hazardous than other types of stocks in terms of how they may react to volatility or changing economic situations, they can provide investors with some assurance that dividends will be paid and at a higher rate in the future. This can be comforting if you rely on dividends for current or future income. Dividend Kings versus growth stocks. Because you're working with a company that's been operating for a long time, it's probable that they've already completed the most of their more dramatic expansion. The Dividend Kings may not be a suitable fit if you're searching for shares that will see considerable price appreciation and that you can sell at a profit. Instead, growth stocks may be a better fit for your portfolio. Growth stocks often do not provide dividends to investors as a trade-off. Small capitalization stocks are another option. Instead, they reinvest revenues in the company's continued expansion. That means that if you decide to sell your shares, they will almost certainly be worth far more than you paid for them. In the interim, however, you won't have the additional income stream that dividends can bring. How to invest in Dividend Kings. If Dividend Kings are offered as part of mutual fund offerings, you can invest in them through your 401k or another comparable employment plan. If you want to put money into the Dividend Kings on your own, you can do so using an online brokerage account. Commission-free stock trading are now available from a variety of brokerages. Investing in Dividend Kings is comparable to investing in any other stock in that it's crucial to consider factors such as the current dividend distribution and how it's trended historically. Consider the fundamentals of each stock, such as the price-to-earnings (P/E) ratio, earnings per share (EPS), and debt-to-equity ratio. Fundamentals can tell you how financially healthy a firm is, but they won't tell you how much money it will pay out in dividends in the future. Remember to maintain historical performance in context, as what a stock has done in the past isn't a guarantee of what it will do in the future. Don't forget to consider diversification. If you're looking to invest in dividend kings, buying only consumer cyclicals or focusing solely on utilities could backfire if the economy takes a turn for the worse. It's also vital to keep an eye out for firms that could become dividend kings in the near future. Again, these are firms that have a long history of increasing dividends and are prepared to continue to do so in the future. Examining fundamentals as well as market situations that can encourage a would-be dividend king to raise dividends could lead you to the next emerging star. Is there a dividend king ETF? ETFs are intriguing because they allow you to buy a basket of securities in a cost and tax-efficient manner. These investments are similar to mutual funds, but unlike mutual funds, they can be traded on a stock exchange. There was no single ETF dedicated to the dividend kings at the time of publication. However, several ETFs specialize in dividend aristocrats. These funds may provide exposure to dividend kings as well as other stocks that have regularly increased dividends over a shorter period of time. ETFs can be purchased using an online brokerage account, and many brokerages now provide commission-free ETF trades. How to find dividend stock ideas using the Dividend Kings list. The Dividend Kings list is an excellent resource for dividend stock recommendations. However, not every stock on the Dividend Kings list is a good buy at any particular time. It's possible that certain stocks are overvalued. Some, on the other hand, may be undervalued, making them excellent long-term investments for dividend growth investors. The following walkthrough illustrates how to filter the Dividend Kings list for the stocks with the most appealing valuation based on the price-to-earnings ratio for those inexperienced with Microsoft Excel. Step 1. Save the Dividend Kings Excel spreadsheet to your computer. Step 2. Follow the instructions in the video below. In the video, we look for price-to-earnings ratios of 15 or lower. Any criterion that best describes value for you can be chosen. PE screen for Dividend Kings. Alternatively, you can filter for a larger dividend yield by following the procedures above. Dividend Kings, yields of 2% or greater, will display stocks with a 50-year dividend history and above-average dividend yields. Looking for companies with a lengthy history of dividend increases isn't a foolproof strategy to find stocks that will raise their dividends every year in the future, but the Dividend Kings have a lot of stability. Investing advice. Consider speaking with a financial advisor about the best ways to use dividend income in your portfolio and how you might be able to reduce your tax burden. Finding a financial advisor, if you don't already have one, doesn't have to be difficult. The financial advisor matching function on Smart Asset makes it simple to connect with experienced advisors via the internet. It only takes a few minutes. Start right now if you're ready. You may owe capital gains tax if your investments pay off. With our capital gains tax calculator, you can figure out how much you'll pay when you sell your stock. The bottom line. If a firm is labeled as a dividend king, it means the company is financially sound and pays consistent dividends to investors. Whether you're looking for a dividend-paying stock, Dividend Kings might be a good fit for your portfolio. But talk to your financial advisor to see if it's right for you depending on your goals and needs. What are your thoughts on our video? Was our video helpful? Please let us know in the comment section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.